Every single second, trillions of dollars move across the global financial system. Some traders make a fortune in minutes, while others build massive wealth over months. But here is a harsh reality. Over 90% of beginners lose their money in the very first month. Why? Because they jump into the live markets without a map, without a mentor, and without understanding the basics. I don't want that to happen to you. And that is exactly why today I'm officially launching a brand new, completely free trading series for beginners on this channel. Visual bullet points popping up on screen showing future episode topics like candlesticks, risk management, chart patterns. Over the next few weeks, we are going to break down everything from scratch. We will cover chart patterns, indicators, risk management, and the exact step-by-step strategies you need to become a profitable trader. You don't need any prior experience, and you don't need to buy any expensive courses. This series is your complete roadmap, so if you want to master the markets and build a real source of income, do yourself a huge favor right now. Smash that subscribe button, hit the notification bell right next to it, and drop a like on this video. By subscribing, you ensure you won't miss a single episode of this masterclass series. Done. Awesome. Now let's jump straight into episode 1. Understanding the markets, the trading styles, and their buy or sell on any charting platform, you need to understand the 4 major types of financial markets available to you. First, we have the stock market, also known as equities. This is where pieces of publicly listed companies like Apple, Tesla, or Microsoft are bought and sold. It is the most traditional, highly regulated, and reliable market in the world. Second is the Forex market, short for foreign exchange. Here, global currencies are traded against each other like the US dollar against the euro or the British pound against the Japanese yen. Forex is officially the largest and most liquid financial market on Earth, moving over $7.5 trillion every single day. Third is the cryptocurrency market. This is the newest decentralized frontier where digital assets like Bitcoin and Ethereum operate 24 hours a day, 7 days a week, 365 days a year. It never sleeps. And fourth is the commodities market, where real-world raw materials are traded, such as gold, silver, crude oil, and even agricultural products like wheat and coffee. Where are these markets popular? The absolute undisputed superpower of these financial markets is the United States. The U.S. holds over 40% of the world's entire stock market value, home to giants like the New York Stock Exchange and NASDAQ. For Forex, the massive global hubs are London, Tokyo, and Singapore. Crypto trading is heavily dominated by the U.S., South Korea, and Turkey, while the global center for commodity futures trading is located right in Chicago at the CME Exchange. Now that you understand the different markets, let's talk about how people actually trade them. The first and fastest style is called scalping. Scalpers are like financial ninjas. They enter and exit the market within seconds or minutes. Their goal is to capture tiny price movements throughout the day, executing dozens or even hundreds of small trades in a single session. They rely on high leverage and massive volume. For a scalper, holding a trade for even 1 hour feels like an eternity. It requires extreme focus, lightning-fast reflexes, and heavy stress management. Where is it popular? Scalping is incredibly popular in the United States and the United Kingdom, especially among retail Forex and futures traders. Because these regions have the fastest internet infrastructure and closest proximity to exchange servers, traders get near zero execution lag. It is also booming in South Korea and Japan, where retail traders love fast-paced, high-volume intraday setups. Next up is the most talked-about style on social media, day trading, also known as intraday trading. Unlike scalpers, day traders hold their positions for minutes to hours, but they have one golden, unbreakable rule. Every single trade must be closed before the market rings its final bell. They never hold positions overnight. This completely eliminates the risk of unexpected bad news crashing the price while they are asleep. Day traders look for high volatility and strong momentum, usually trading stocks or options based on morning news, earnings reports, or technical chart patterns. Where is it popular? Day trading has exploded globally, but its absolute main hubs are the United States and India. In the US, retail platforms have made short-term options trading a massive trend. Meanwhile, in India, the National Stock Exchange has seen a historic surge in retail day traders, focusing heavily on index options like Nifty and Bank Nifty, making it one of the largest derivative markets by volume in the world. If you do not want to stare at a computer screen all day long, this next style is perfect for you: swing trading. Swing traders look at the bigger picture. Instead of catching a small move that lasts minutes, they try to capture a swing or a trend that lasts anywhere from a few days to several weeks. They use daily and weekly charts to find overvalued or undervalued assets. This style is ideal for people who have full-time day jobs or businesses because you only need to analyze the markets for about an hour in the evening. It requires deep patience rather than fast reflexes. Where is it popular? Swing trading is highly popular across Europe, especially in Germany and France, and Canada. Traders in these regions often prefer a balanced lifestyle and lean toward mid-term stock and commodity structures. It is also the go-to style for the global cryptocurrency market, where smart traders try to ride massive multi-week Bitcoin bull runs without getting stressed by daily price fluctuations. Now let's look at how the institutional big boys play. First, we have position trading. This is the longest-term trading style. Position traders hold assets for months or even years. They completely ignore short-term market noise and focus entirely on fundamental analysis, macroeconomic trends, and overall corporate health. But alongside them sits the modern titan of finance, algorithmic trading, or algo trading. This is where human emotion, fear, and greed is completely removed from the equation. Traders write computer codes and scripts that automatically buy and sell assets based on preset mathematical formulas. These algorithms can execute thousands of trades in a single millisecond, a process known as high-frequency trading. Where are they popular? Algorithmic and position trading completely dominate mega financial capitals like New York, London, Singapore, and Hong Kong. In fact, estimates show that over 70% to 80% of the entire trading volume in the U.S. stock market is executed entirely by automated algorithmic bots owned by hedge funds and investment banks. So now you know the major types of markets, the key trading styles, and their global hotspots. The big question is, where do you fit in? If you have lightning-fast reflexes and want quick action, explore scalping. If you want to make trading a daily hustle without overnight risks, choose day trading. And if you have a 9-to-5 job and want a calmer, highly profitable approach, swing trading is your best bet. No matter what you choose, remember the golden rule: consistency and strict risk management are the only keys to long-term survival. Never jump in with real money without practicing first on a demo account. In our next video, we are going to break down the exact tools and indicators you need to start your very first swing trade. If this breakdown helped clear your confusion, smash that like button, subscribe to the channel, and hit the notification bell so you don't miss our next trading guide. Drop a comment below. Which market and trading style are you going to start with? Thanks for watching, and see you in the next masterclass. But wait, before we wrap up today's video, I have some massive news for all of you. If you are a complete beginner and you genuinely want to make a consistent income from these markets, I have officially launched a brand new, completely free beginner trading series right here on this channel. In the upcoming episodes of this series, we are going to learn everything step by step. We will cover how to read candlestick charts from scratch, how to place a stop loss correctly, and how to maximize your profits while keeping your risk extremely low. You do not need to spend thousands of dollars on expensive courses. This free series is going to be your ultimate roadmap. So, if you don't want to miss a single episode of this powerful masterclass, do yourself a huge favor right now. Smash that subscribe button and hit the notification bell so you get alerted the exact second the next episode drops. Also, if you found today's breakdown valuable, please drop a like on this video and share it with your friends. Thank you so much for watching today's video. I will see you all in the next highly exciting episode of this series. Until then, stay disciplined, manage your risk, and see you in the next masterclass.